Hello, everybody. Thank you for having me. My name is Jon, and I am the COO at ShapeShift. I helped start the project about 4.5 years ago, and have kind of been on this wild crypto ride ever since. I don't have any, I think this is supposed to be like a town hall style format, so I don't have any particular presentation plan today, as much as the goal here is to get you all engaged in asking questions about ShapeShift, but also the crypto industry as a whole, and a chance to field those questions. So I would like to just kind of hop right into it and see if anyone wants to start.
I've never heard of ShapeShift before.
Yes, wait for the happy box.
So I've never heard of ShapeShift, so it'd be great to hear more about
Yeah. So Justin just gave a brief overview there, but I'll give some more. So ShapeShift is really a platform for buying and selling digital assets. And what this means is we allow users to very easily convert from one type of digital asset to another type of digital asset. And specifically, we do this with no accounts, with as little friction as possible, and without ever holding customer funds. So when we kind of brought this model to the market about 4+ years ago, it was very new. All exchanges, you had to deposit your funds, you had to sign up an account, you had to then place your limit orders, you then might get exchange, and we found that this really wasn't very easy for many users. Maybe people who understood trading, this was great, but there's a lot of users that come into the space and this is just not an easy thing for them to do, and they don't have a lot of understanding. So our goal with ShapeShift was to build a system that made it very convenient and easy to securely convert your funds. And that's kind of what we've built, and we've built it as an open API platform. So there's a number of different wallets. Some of you may have used some of them, such as Exodus, Jax, Koinomi, Blockchain.info, Edge. Paul was just up here a moment. Their wallet plugs in as well. All these wallets plug into ShapeShift to allow the user to easily convert within their wallet and make it relatively seamless. So at the core, that's how we started the company and started the product. We've grown a lot since then, and now we're doing a couple other things. We run a market data resource called CoinCap. Some of you may have heard of that. It's an application you can get on your phone as well as a website. We have a hardware wallet that we acquired last year called KeepKey, and that is a hardware device very much like a Ledger or a Trezor, if you've heard of those, that can very easily allow you to safely secure your private keys. And we've also released a new product that's currently in closed beta that we call Prism, that is a smart contract-based system for getting exposure to a basket of digital assets. So that's kind of a brief overview of what we do. Does that help?
Yeah, totally.
Yeah. Thank you. It's like Paul.
Mic check. So with all of the many assets in the space, I'm sure inundated with requests of adding assets to your platform, what are kind of the main things that you look for before an asset gets added to ShapeShift?
Yeah, great question. And this has definitely been an evolving process over the last number of years as the regulatory landscape has evolved. Originally, and kind of the main thing we still look for is we want to add assets to the platform that we think have value and that people want. We don't want to be the decider of which assets are important necessarily, but we want to make sure that we're offering to the market any sort of asset that people might want to trade. So we look very highly at demand, what is the exchange volume on other exchanges, and we also look at the technical code base. How easy something is to add to our platform has a lot to do with how that blockchain was built. If it's a fork of Bitcoin, that's something we've dealt with a lot before, and it's relatively easy to add. If it's a brand new code base, like Ethereum or Monero was when it was first launched, that's a bit harder to add, but we still look for those too, especially if we think they're adding value to the ecosystem. So we kind of go through a whole process of technical, market, legal, and all these various considerations, and we have a formal review process that happens at the company, and as assets get approved, we try to get them added to the platform.
ShapeShift is doing transactions for people, but also machine to machine.
Mm-hmm.
Could you tell something about the amount of transactions that are happening from machine to machine?
Yeah, good question. So it's a little bit hard to gauge that. We do know that about any given month, probably about 65 to 70% of our transactions happen over API, meaning not through our website. That doesn't necessarily mean those are machine to machine, because any wallet partner that integrates with us is also going to show up as an API transaction. But I do know that there's a number of different bots and automated trading interfaces that people have built that plugged into ShapeShift, and that very much is a machine to machine transaction. So unfortunately, I don't have specific statistics on that, but it's definitely something we've seen growing in prevalence. And when we created ShapeShift, that was actually something we spent a lot of time thinking about, is that we wanted to build a system that was very easy for people to plug into, but more importantly, machines, because we do see a future where the majority of this trading will probably be happening machine to machine as the ecosystem matures. So to us, that's very important. It's a throwing competition.
Okay, so there's a naive question, sorry, but there's the money you make on the gas, there's the money you make on the spread or the arbitrage or whatever. So where does ShapeShift fit into that? When you see the huge range on prices on the different exchanges, and yeah, let's leave it at that.
Okay, that's a good one. Yeah, so I think the question is more or less, where does ShapeShift get its rates, and where does our revenue come from? And this is actually pretty straightforward. What ShapeShift does is we plug into all the different liquidity providers that we can find. So this is, many of the most common large crypto exchanges. And we plug our system into that, and our system is designed to algorithmically always try to find the best price at any given time that we can find. So when the user comes to us and says, I want to trade some Bitcoin for Litecoin right now, we tell them, great, this is the rate we can give you, and that user can decide that either that rate is great or it's not. What we always try to do is provide what we think is the best rate that we can find at any given time. Once the user decides to take that rate, we deliver them their coin directly from our own inventory. And after that, we essentially just put it through our own trade engine to try to do slightly better on that trade than we gave to the user. And essentially, we're willing to take a little bit of risk to make our revenue, and we're de-risking the customer because they get their transaction right away. And on average, we try to do better than the rates that we give.
So you're centralizing the decentralized transactions?
Well, I mean, the transactions are very much decentralized still. Our system is a centralized trading engine that we try to make money off of, but that has nothing to do with whether the transactions themselves are centralized. The transactions are still very much happening in a decentralized manner over any various blockchains.
So I actually had a question about centralization and decentralization. So
yeah.
What would be the difference between ShapeShift and a decentralized exchange, and why should we, or should I, for example, choose for ShapeShift over a decentralized exchange?
Yeah, good question. So it definitely depends what you're trying to do and what assets you're trying to trade. I mean, the most easy and obvious answer is just that you're not going to be able to trade, at least in today's ecosystem, every asset you want to on a decentralized exchange. Most decentralized exchanges at this point are very, very heavily focused on Ethereum tokens, and the Ethereum ecosystem, which is great. I think the work that's being done in that land is very, very good and important, but it's still inherently limiting. And if you want to trade cross-chain in any manner, ShapeShift's, at the moment at least, a much, much better and easier option for that. Another problem that you are going to find with decentralized exchanges, at least in the short term, is just liquidity. Liquidity follows other liquidity, and to the degree at this point that decentralized exchanges are still pretty young and new, they have a very low amount of liquidity compared to other centralized alternatives. Now, an advantage ShapeShift gives is that you never have to worry about liquidity, because we're a little different. We're not like an order book exchange. That's not what we're trying to do. We're more just trying to offer a service of convenience that makes it very easy and very quick for someone to get from one type of digital asset to another type of digital asset. And in order to do that, we make sure that you always have what we hope is the best rate, and that we always have liquidity right there ready to sell to you. So a lot of the magic of ShapeShift, we try to explain to people, really happens behind the scenes. The interface we try to make as simple as possible. We try to make it as easy as possible. But it's that liquidity management that happens on the back end. And this is something I think I've already seen and talked to. A number of decentralized exchanges are running into these problems that we essentially ran into many years ago. And we can make it a lot easier to make sure that liquidity is there when you want it, as you want it, at a good rate. So that's something ShapeShift really offers over at that point. Now, decentralized exchanges may very well evolve. And ShapeShift itself, we're constantly paying attention to these things, and we may evolve too. Some of these things will probably be incorporated into ShapeShift itself as the market matures. Right now, the decentralized exchange market is pretty young, and those liquidity problems in particular really are, I think, holding it back at the moment, but we'll have to see how that develops.
So hold on, let me ask you a question first. So when you're talking about decentral exchanges, and now that that and blockchain interoperability and atomic swaps are becoming more common, what do you think would be the next step after that, and where is ShapeShift actually focusing its R&D efforts, more specifically? So if we just take a step into the future, it might be, say 6 months or a year from now, or maybe even a little further if it goes more slowly. But what do you see? How do you see it developing?
Yeah, it's hard to predict a little bit, but I think all those things you mentioned, decentralized exchanges, atomic swaps, you could probably put the Lightning Network and other things like that in this category. A number of these other solutions are being developed. And right now, I think that's still very, very young technology. It's not really vetted. It's not necessarily secure. That will change over time. This technology is very promising. It will get better. And ShapeShift in particular pays very close attention to these things. As it develops, we are building a lot of things ourselves in the background that we have not announced yet. And a lot of our R&D, to answer that question directly, goes directly towards these type of things. We want to, at ShapeShift, we're built on a philosophy of we want to build products that actually take advantage of what the blockchain offers. Or in other words, we don't want to just reinvent things that have happened in the old system and do them on the blockchain. We want to take what the blockchain allows and deliver new solutions and new products and innovative ideas that weren't possible before. So another way to put this is we're really focused on the future economy, not the current economy. And to us, that future economy is entirely digital, and that allows for things like ShapeShift itself that could not really have existed in the current infrastructure. So we're working on a lot of new things along that direction, some of which, unfortunately, I can't talk about yet at this conference because they're highly confidential and being worked on, but we're hoping over the next, call it, through the rest of this year and beginning of next year, we can start announcing some of these very cool things that we've been working on that we think a lot of people will be excited, and will go a lot towards some of the things you're mentioning.
So quick question. Can you describe the difference between you guys and Bancor?
Yeah, so Bancor is a decentralized application running on Ethereum. So obviously the first immediate difference is the one I mentioned earlier when I was talking about decentralized exchanges. Bancor only works with Ethereum tokens. ShapeShift works cross-chain. So that right there is a significant difference. And Bancor's liquidity model is also, they try to automate that as part of the smart contract. When I first read the Bancor white paper, I immediately raised a red flag in my mind that liquidity model has a lot of potential problems. Specifically, something we've seen at ShapeShift for many, many years is that a lot of these new models that are coming out, especially something like Bancor, I also see this a little bit with Kyber Network, they more or less assume that as they scale, they will see a more or less similar amount of buy and sell orders of a certain asset if, for example, a rally's going on. The reality, and we've seen this at ShapeShift all the time, is that anything but that happens. A lot of times you get stuck with what I would call one-way runs. Bitcoin's going up, or a coin's going up, and everybody just wants to buy. 99% of the orders you're getting are just buy, 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 buy. People are doing it blindly. They're FOMOing, as we say. And this can cause a huge problem with the kind of automated liquidity solution that Bancor is trying to do. All of a sudden, you're going to end up with either no reserves left or a very, very, very terrible price that nobody wants to take. That should, in theory, incentivize people to sell, but when you're really dealing with one of these one-way runs, that doesn't really happen. So at ShapeShift, we have many years of experience dealing with these type of problems and finding ways to stay liquid, even when dealing with a volatile, one-way directional market like that. And I think that adds a lot of value to the ecosystem that kind of goes not always understood because it's behind the scenes.
When you talk about behind the scenes, is this something you don't
Can we throw the?
Excuse me, I have a question. This way.
Yep.
I would like to know how those ShapeShift deal with regulation on a high level.
Yeah, so on a high level, there is no singular answer to this question. We do try to deal with regulation on a jurisdictional basis, and there's many different jurisdictions in the world. We're paying attention to what we think are the most important ones, and we try to make sure that we're taking what we think is a smart regulatory stance in every jurisdiction that matters. Now, that's a very vague way of saying it totally depends on the situation. There is no one regulatory approach. There is no one jurisdiction right now. For every jurisdiction that is trying to crack down or do hard things regulatory on crypto, there's another jurisdiction that's seeing it as an opportunity and doing the opposite. So what we're really trying to figure out and trying to push forward is pushing forward good legislation, good regulation, and trying to educate, some of the people in the space who are making these rules, or specifically the regulators themselves. This is obviously a lot easier said than done. We're making efforts on those ways, but the regulatory question is a constant one, and it's a moving question too. Even the regulatory stance, today, very well might be different by next week or tomorrow, the way things have been shifting, especially in the last 6 months. So what we really do is we hire a lot of expensive lawyers, and we have them constantly working on this problem to try to help us. But there's really no one answer to that question.
You hold, in order to function, you need to hold some of your company's assets crypto at exchanges. Exchanges can go down. Are you insured against that risk, or do you spread your risk so you can take the hit yourself and you accept it as a risk of your business?
Yeah, great question. This is definitely something ShapeShift does. And for the most part, we do just accept this as a risk of our business. We know that in order to deliver this service, we have to hold a number of assets, at least in the current ecosystem, on various exchanges to make sure that we have that liquidity ready to trade quickly, replenish our reserves, and make sure we always have liquidity ready for the customer. This can definitely change depending on what's happening with the exchanges, and we do try to absolutely spread out that risk. We're not trying to centralize it into all one exchanges, and we've certainly dealt with problems like this over the past. Having been in the crypto space 4 years, I would tell you about half the exchanges we've plugged into over the years have all disappeared. So we've dealt with this problem on many fronts. We've mostly been lucky in that sense, in that we've generally, when an exchange has gone down, we've paid close enough attention to see the warning signs and get our assets off those exchanges before it's catastrophic. But we also just kind of see this as a risk of the company, and we would much rather the company take on that risk of holding those assets on the exchange than the user, because then we can provide the user service where they don't have to do that. So to us, it's mostly just we see that as the risk of us operating this business.
Hi. You mentioned earlier that you look into legal when adding a new asset. What are you looking at? Because you have pretty much every coin out there on your platform.
Well, there's a lot of people on Twitter who would disagree with that. We definitely don't have every asset, unfortunately. In fact, our asset additions have significantly slowed down over the last 4 to 6 months, primarily because of legal-related issues. And I can't I'm sure the lawyers would slap me upside the head if I gave the exact criteria of everything, because even that's supposed to be considered confidential, essentially, or we're supposed to keep that proprietary so that people don't try to game it, more or less. But we're looking at a number of factors based on what happened with the asset, how was it issued, what were the initial distributions like, what was the kind of things said about it, how did the founders treat it, all these various things, and particularly with an eye on how someone like the SEC in the US might see this. We're trying very, very hard to make sure that the things we list, we do not consider securities, because that would be a very risky thing, and we are not trying to operate a securities exchange. That's not our goal. So we try to make sure that the assets at least pass that muster and that we feel comfortable with them.
Second question, what's the consistently most popular trading there?
Consistently, I would say Bitcoin, Ethereum. So generally, this pretty logically goes hand in hand with market caps. The highest market cap coins generally have the most trading volume. This can absolutely change from week to week, though, and if you get a run on a particular asset, it'll become the most popular asset that week. But I would say over time, Bitcoin, Ethereum.
Hey, speaking about regulations. I'm just wondering, what do you think, how GDPR will affect the whole crypto industry?
Oh man, yeah, this has obviously been a hot topic over the last month or so as GDPR has been rolling out. Quite honestly, I don't really know. There's a lot of contradictory things in the way that the GDPR regulations were written. Technically, I've heard of some blockchain companies dealing with this, and they're dealing with issues where if you read GDPR by the letter of the law, they would be required at a user's request to remove information from a blockchain. If any of you know how a blockchain works, that's essentially impossible, at least if the blockchain works. If it doesn't work, maybe it's possible, but if it works, that's not really something that's possible. So I think that those regulations are going to run headlong into this at one point. I think in the short term, you're going to have GDPR, you know, whoever the regulatory agency is and that is actually having to enforce this, they're just going to be buried in, you know, 80 million, 100 million websites to review. I have no idea how they're going to get through that backlog to begin with, but I also think they're going to be forced to come face to face with the reality of something like a blockchain, and probably that regulation is going to need to evolve, because requiring someone to do something impossible, essentially mathematically impossible, is probably not going to work in the long term.
Yeah. What about if a transaction goes wrong? Is there anybody you could email or get some help or whatever?
Yeah, absolutely. ShapeShift has a full support team, and that's actually one of the things that we've kind of built our reputation on over the years. Compared to a lot of crypto companies, which generally do not have a good reputation for support, ShapeShift's reputation for support is very good. And that's because we have a full staff support team. You can email them, you can get on live chat with them. They will help you if there's any sort of issue and make sure that it's solved. We have generally very high customer satisfaction ratings with our support.
Is it 24/7?
It is very close. You can certainly submit a support ticket 24/7, but you don't necessarily have live chat support 24/7 yet, but that is a goal of ours. Can we pass the box to him?
What kind of volumes are you doing daily? I saw something like 700-800 million a day. You have that. And what's the average deal size?
Sorry, my name is Willem.
Yeah.
Willem Karik. I'm just, because I forgot where the source, but I've read somewhere you sometimes have been doing volumes of 700-800 million US dollars in 24 hours. Like, I was just wondering, what's the average deal size?
Yeah, that.
And secondly,
Yeah.
how many human traders do you actually employ?
Oh, interesting. So on the first question, that volume number, I'm not sure where you got that, but that's probably 765. Is that a media source? I'm not. We're not quite doing volumes in that range at this point, especially now that the crypto markets have gone down a little bit. I would say during the peak, we were certainly hitting, you know, close to the range of around $100 million in volume in a day, which for a lot of the exchanges at the time, quite honestly, was not that much. But for an exchange like ours that doesn't take custodianship, it was quite a lot. The actual average value of the transaction actually has a lot to do with the markets themselves. Generally, when the markets are going up, people trade higher amounts. When they're going down, they seem to trade less, at least with our product. And I would say that that value is anywhere from approximately 1,000 to 700 euros a trade on average, something along those lines. Repeat the second question. Sorry, I forgot that.
Just out of interest, like how many human traders?
Out of interest, like how many human traders does ShapeShift actually employ?
Gotcha. Yeah, we don't actually employ a whole ton of human traders. Most of our trading is done through a trading engine that we've developed ourselves, and it's essentially all of our execution is automated. So we don't really have too many human traders looking at that. As the company grows, this is something we're considering, especially as transaction sizes look like they might grow in some cases. But at the moment, it's essentially all automated.
That's all centralized?
Simple question. Is it all centralized at one jurisdiction, or do you operate from different jurisdictions?
Yes, so ShapeShift is a company that is based in Switzerland, in the the canton of Zug. Crypto is often known as Crypto Valley nowadays. That is where our headquarters is, but our team is distributed to many different parts of the globe. So we have people in Switzerland, we have people in the States, we have people in the platform itself. So the platform, in terms of the actual API and the servers we run, is essentially a centralized service. It's an API that we run, it's servers that we run. We do have our system running in many different locations for redundancy reasons, but in that sense, you can consider it a centralized service. I like to say that ShapeShift essentially offers a lot of the benefits of both centralization and decentralization together. Particularly in the centralization piece allows us to do essentially offer the liquidity that I've been explaining. The decentralization aspects is that we take advantage of users holding their own keys, holding their own wallets, and not holding it for them and exposing them to that counterparty risk. So we always, I'd say a lot of ShapeShift products try to run kind of a hybrid on the spectrum of decentralization to try to get some of the benefits of both.
Just a question, how are the transactions being completed behind the scenes? You were talking about decentralized transactions for the customers, but how does the transaction unfold when you trade with an exchange? Because when the money comes in, it comes to you, and how does it transfer again to the different exchanges you are partnered with?
Yeah, so essentially what happens is that when a transaction comes in, we are selling our own inventory to that user. So you come to us and you give us your Bitcoin. We're going to instantly, the moment we know that we have enough confirmations on that Bitcoin, we're going to send you your Litecoin from our own Litecoin wallets. Simultaneously, we're going to go to the exchange and we're going to try to find a way, at hopefully a better rate, to replenish our Litecoin reserves. And that happens with liquidity that we already have sitting on an exchange. So it essentially happens entirely separate from the transaction with the user.
Yeah, but is there any automated system when the transaction is being sent to the customer that there is an automated system sending the transaction again to the exchange, or is it manually done?
I see. Yeah, no, actually, that's an no, that's actually a very interesting question. I just misunderstood it. So in our world, we refer to this as balancing, meaning that we're trying to keep, essentially when we do, let's say a replenishment on the exchange, or maybe our hot wallet gets too high and we need to get some of it to the exchange, we have to balance between these various wallets, our hot wallets and these exchange wallets. That is essentially all automated. This is another thing that we've built over the years. We've built a robot that essentially obeys a number of different rules and is highly secure, that essentially makes sure that we're always pushing money to the exchanges when we need it and pulling it to our hot wallets as we need it. And this is part of our liquidity management.
The question about responsibility, and especially crypto-to-crypto trading is prohibited in some countries. Now, even in New York, it's not allowed.
Correct. Well, it's allowed in New York, but you need a very ridiculous license called the BIT license to do it.
Okay.
Yeah.
Well, my question is, where do you put responsibility if you essentially platforms that use your API and therefore you can trade via ShapeShift on their platforms? Do they need to deny service to customers in New York, for instance, or?
Yeah, so our API is set up in such a way that we do try to essentially block jurisdictions that we're not allowed to operate in. So for example, if you're in New York, you are not able to operate ShapeShift. And even if you use one of our partner apps, you're likely not going to be able to use it, unfortunately. And this is just the current state of regulation in New York. Now, you can go across the river, not very far, to New Jersey, and all of a sudden, you're apparently in the land of the free, and you can use ShapeShift again. I was actually in New York recently, and I was just kind of pontificating on the ridiculousness that on one side of the river, ShapeShift was not allowed, and on the other side, it was. In a world of digital finance, arbitrary lines like that seem very silly to me, and I think in the long term, they will likely go away. But in the short term, we have to try to abide by regulations such as that and block certain jurisdictions. Anyone else want to take the box of happiness?
As you explained earlier, you said that behind the scenes you try to find the best rate in exchange. I'll just give it a quick look and I compare it to your rates to Binance, and it doesn't look
that gray at this moment.
Mm-hmm.
Can you elaborate on that?
So let's examine what you even mean when you say you're trying to compare a rate versus an order book exchange. Order book exchanges don't even have rates. That concept doesn't even make sense in the way we're trying to use it here. They have an order book, and they might have a last price, but you have no idea how much of necessarily, unless you're looking deeper into the trades, how much volume of that last price was. It might have been at a very, very, very small amount, and often it might just be bots trading back and forth with each other, small amounts, to essentially make it look like that price is higher. Now, the reality is that if you put any sort of amount of volume, you're going to hit what we would call the depth of that order book. And all of a sudden, that rate's going to get worse. So you can't necessarily just look at the last price on an exchange and compare it to ShapeShift and think that's a fair comparison, quite honestly, because what we're doing is we're taking that volume into account. What we offer, that change in price when you put a significant volume into an order book is often known as slippage. It's essentially the price you lose by buying more of that thing than if you just bought the tiny amount that's available at the top of the exchange. With ShapeShift rates, we protect you from slippage. So we do have to make some calculations about what we think the risk is there, but the rate you see is what you get at the amount you send us, and you don't have to worry about that slippage of the order book. So to truly compare that rate, you really need to look in the order book, and you need to compare something like 1 Bitcoin's worth of that order. What is the price you would actually get? And then compare that to ShapeShift.
Thanks, John. I'm just intrigued, like the way how you just explain how you're working orders. Like, isn't ShapeShift doing a lot of netting? I mean, orders are coming in, buy, sell orders continuously. Like isn't it like you are able to net, say, 50% of all buy and sell?
Yeah, so I think what you mean there is that if enough orders... Yeah, if enough orders are in theory coming on both sides, we have enough buys of one pair and enough sells on that same pair, we can what we would call internally match those. And those are cases where we don't have to go to the exchange. But as I was explaining earlier when the gentleman asked about the difference between us and Bancor, the reality is that that kind of equality between trading is actually quite rare in the space. We get, I think in a very efficient, mature market, that would likely be the case, but crypto is anything but either efficient or a mature market. And often we just see people jumping on the bandwagon more or less. You know, a rate starts going up and you get a one-way traction, and you can't just clear those internally, or we can't do that. We wouldn't have enough volume both ways. And so that's where we do need to utilize other exchanges.
Thanks.
Perhaps a rather basic silly question, but in regards to the regulatory issues with the example between New York and New Jersey, how do you protect against somebody using, for example, a VPN in New York to make it look like they're in New Jersey?
What's a VPN? The honest answer is we have to make our best effort to comply with those laws. If users decide to go around our best efforts, at a certain point we can only do so much, is the reality. You know, no matter what level of regulation you put in, and this is very true of full AML KYC exchange, that's not going to necessarily stop bad actors from finding ways around those systems from either, so in our case, that may be something like using a VPN. We certainly do not condone that or recommend it, but it could definitely happen. But it also means that in the case of a fully AML KYC'd exchange, someone might go onto the darknet market and for a very low price, buy a bunch of verifiable identities, and then use that to get through their AML KYC process and get right through those things too. So the reality is that you can only do so much. And in the industry, this is often talked about as risk mitigation. You can do whatever you can to make the risk less, but you cannot fully eliminate it. You can't fully eliminate people trying to go around these systems. It's just the reality of the situation.
Thanks.
Yeah.
So John, what insights have you guys gained as being one of the pioneers in operationally managing so many different technologies, so many cryptocurrencies at the same time? That must be really challenging.
Yeah, great question. A couple things on this front is that as a exchange that deals with so many different blockchains, and we dealt with this, we dealt with a lot of different blockchains, I would say before it was cool, before essentially the altcoin craze happened in the last year and everyone started to take alts seriously. In 2014, we started this company and we had this thesis that tokens were going to be a serious thing, that the majority of value in art, and this is still happening, we think the majority of value will be digitized and tokenized in some way, and that an easy way to frictionlessly go from one of those assets to another is very important. But we don't know necessarily always the best way to do that. And this happens a lot when we deal with these various blockchains, because a lot of these blockchains, I would say, are no better than, if I'm being generous, beta level software. Really more like alpha or pre-alpha when they launch. And they have all sorts of problems. So we're constantly communicating with these different blockchain communities. And I like to say that ShapeShift is often the crypto canary in the coal mine, meaning that we see lots of problems with blockchains well before the developers do and well before other exchanges do, because every single trade we do is on chain. A more centralized exchange than us, or a traditional order book exchange, the majority of their trading and order matching happens just in their database off chain. So they don't have this problem. They don't necessarily have to deal with the extent of the blockchain issues that we do. But often I'm talking with other exchanges and I tell them about a problem that we're having because we're seeing some level of blockchain scaling or issue happen, and I warn them about it, and sure enough, within 12 or 24 hours, those exchanges will be seeing the same problem I warned them about. So we often stress these blockchain systems more than they're ready for, and especially when they get popular. And that is one of the hardest things we have to deal with, is just the maintenance of these chains, the maintenance of the nodes that we use to communicate with those chains. It's kind of like a game of whack-a-mole some days. Our engineers are fixing one, and then something happens on the network of another one, and it breaks, and we have to fix that. That's a constant challenge that we have to deal with. Yeah, great. So the question is essentially, talk about some interesting uses of ShapeShift and its API that people have come up with. So the most common one is, I've talked about a little bit, is the multi-coin wallet itself. When we first built ShapeShift, there really were not many multi-coin wallets. There were Bitcoin wallets, there were some Litecoin wallets, and some Dogecoin and Namecoin wallets. But there weren't a lot of assets out there, and people didn't really see a need to create these multi-coin wallets. But we saw very early on that this would become interesting, and that people would start to build these things. And we kind of built ShapeShift with the idea that we hoped people would use ShapeShift to integrate these multi-coin wallets and make it easy to transfer value within the wallet itself. That has absolutely started to happen at this point, and it's actually become likely the most important revenue model that these wallets have. Many of these wallets spent many, tons of time and effort building secure wallets, and they had no way to monetize it because they put out all these free, great open source tools. They interact with the blockchains great, but that doesn't give anything back to the developer. In our case, we are able to let these wallets plug into us, and they can actually have some sort of revenue share with us, because we essentially share half our revenue with them when their users use us. So it's actually given them revenue models, and I think it's created a much better ecosystem of multi-coin wallets. That's probably the most interesting and useful one out there. I've also seen a lot of other interesting and smaller use cases, such as people using ShapeShift when they're doing their token sales. We've done some integrations where they're able to send from ShapeShift, and we send a piece of data to whatever the token sale contract is, and that allows people to actually purchase into some token that they want without ever having to have whatever wallet they would need on the other side, because we essentially send the data for them and can credit it to their eventual wallet and things like that. So there's a couple examples.
So the company legally operates from Switzerland. As far as I know, that's because, according to the Swiss, crypto exchange is outside of regulation, so they simply don't regulate it. Do you have plane tickets and suitcases ready whenever they decide to?
Well, it's actually not quite that simple. Switzerland does regulate crypto-to-crypto exchanges. It's just that their regulations are a lot lighter than some other areas. And specifically, they allow for some types of de minimis exemptions for certain value transactions. And this is one of the reasons you can only do up to a certain value transaction on ShapeShift. Certainly, if Switzerland changed their tune, we would have to change our business model potentially, or at least decide whether that's a jurisdiction we wanted to be in and continue to serve. But honestly, that's the case for anyone in the crypto industry doing anything anywhere. At any point, a jurisdiction could pass some silly mistaken law and force you to do something. And that is the state of trying to build something that is disruption, and the regulators themselves not understanding what's going on and making generally stupid rules and laws that they think protect people, but in our opinion really don't. But this is kind of back to that regulatory jurisdictional question. We just have to pay attention to it and adapt. There's really no other answer because we can't predict the future. We can't predict what regulators are going to do in the future, what jurisdictions will do. We have to use our best guess. From all signs, Switzerland is becoming more friendly to crypto, not less, so I'm not too worried about that in Switzerland's case, but the same cannot be said of some other jurisdictions.
Test.
Okay. So are we done? Cool. All right, well, it looks like we're done. Thank you, everybody, for the great questions. Really appreciate it.